Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on gold, the dollar, and the miners, starting it off with the dollar. So the dollar is the most oversold on the daily in terms of RSI that it has been in over 3 years, and on the weekly time frame, 6 years. So it's extremely oversold. We know a bounce is coming in the near-term future. We know gold will likely pull back when this bounce occurs because the inverse correlation between the two has picked up fairly significantly over the past few weeks. So we see the dollar has seen a couple of dumps, some of them on the FOMC reaction, some data leading to further downside, and it's really inhibiting the bull's ability to see any kind of turnaround. And you zoom out and look at the hourly time frame and see it's very clearly one long-term downtrend. So what we need to see happen for the bulls to get this oversold bounce going, number one, on the daily time frame, these bullish reversal candlesticks are not seeing follow-through or confirmation. We can see green and then red and a lower low, then a green and then red. So these bullish reversal candlesticks are getting no confirmation and follow-through. We had a solid bullish reversal candlestick on Thursday, zero follow-through on Friday with a close at the low of the day. So the bears are still in control. Now, I said RSI, the most oversold in 3 years. It has cooled off since that point a bit. But one thing that has not cooled off is the weekly RSI. And we look down at that, and here it is down right now at about 27 or so. And we're coming up on a very key support. The first one is 93.02, but the support is 91.92 for me because that's the lowest price we've seen on the weekly time frame in the past 2+ years. So I do believe we will see a bounce from these support levels, and even if it's just a short-term bounce to cool off those RSI levels, that's what we're looking at for support. And we'll be looking for, even if it's just a short-term bounce, we could see a bounce up to $95 and see some relief of that RSI. So on the 4-hour time frame, support is the lowest price we've seen, 93.15, and resistance for the bulls to break the lower highs, 94.10 and 94.29 are the two levels that need to break. We got plenty of downtrend resistance lines we could draw, but at this point I would really just watch the price levels more so than the trend lines, but that's a pretty good one. So we'll stick that right there just to keep an eye on it. Again, this is the 4-hour time frame. So checking in on gold, we can see very similar, again, inverse reaction with the breakouts on the FOMC and data, and seeing these higher lows and higher highs on the hourly time frame play out. So on the daily time frame, we've seen brief consolidation leading to further upside. Bearish reversal, spinning top candlestick was negated, and the bulls are seeing this move follow through. But again, it's the fact that we've already broken the lower high, or I should say the higher low pattern. We broke that level. That meant a lot to me, technically speaking, because whenever I see that happen, it shifts my mindset, where I'm no longer looking for the uptrend of higher lows and higher highs. When we break that higher low, I then start looking for lower highs and lower lows. So that has not started playing out yet in any way, as the bulls are still extremely strong. But looking at it from a longer-term perspective on the weekly, we can see that in order for the bulls to break the lower high pattern, we have to break 1295.98, and it's a little double top at that level. And because we're coming right off the bottom, it's not likely that we see this move follow through to break those levels without seeing, at the very least, another lower high, then a higher low and a higher high. So that's what I'm going to be looking for. If the bulls are going to see this move continue, it is going to have to require a bit of consolidation before making it up to that level just under the 1300. But we are closing in on a bullish MACD cross, so the bulls definitely have some momentum. And sorry, these lines are not in the right place. They were drawn on different time frames. I don't want to confuse anybody. So that's what we're looking at on gold. And one thing that stands out now compared to the miners is that the miners are not anywhere near as strong as gold is. So with the market extremely strong and gold extremely strong, this tells me that miners have left, or I should say traders have left this market significantly, because this run we had back last year was when all the action was going on, and I keep pointing out in my videos how the range is tight, the volume's low, and the movement is there in gold and the market at all-time highs. So it is very notable that we do not see this action in these miners. And I think we might have had a little climax of interest, and now it's just cooled off a bit. So looking at GDX on the daily time frame, it's strong. It is seeing a bull move. We're seeing inside bars on the daily time frame, which should see a break on Monday. So you can look at the range of today, 2261 and 2294. That's what this tells us on these inside bars. It's just an equilibrium pattern. If we looked at the hourly time frame, it's higher lows and lower highs and tightening range with a break imminent. So we are breaking the lower high pattern on the daily time frame, and resistance from here after 2306 is 2342, and the high of the last 3 months, 2386. So the weekly time frame, we're coming up to key resistance. This 50-week resistance has rejected a couple bounce attempts in the past. It's a bit of a descending triangle pattern where we could just put a horizontal support line just about at 21 and a downtrend resistance line in terms of the lower highs that are forming. And if we can't get over this 50-week, we will consolidate back down towards the $21 range. But if we do get over that 50-week and do get over 2386, that's the bull break that the bulls are looking for, and it will come with a bullish MACD cross, which is on the verge as well. So GDXJ at resistance as well, not inside bars, but the 100-day moving average resistance. We did close just above it, or just at it, I should say, but it has been rejecting the price recently. So for the bulls to make a clear break here on the daily, we have to get up above 35.05, and we can see on the weekly time frame, it's a bit of a different setup here, but we have our low, a base of support at 30.89 and 30.98, and now the bulls have to break 35.05 to try and change this trend. So we've gone from lower highs and lower lows. Now we have our higher low, and we have to get that higher high to try and reverse the momentum back to the bulls. So at this point, the two clear levels on these miners is the 3-month high really on the daily time frame, because if they break that level, they can show follow through in their favor. But the way that the correlation is going with gold, we're pretty much going to have to see a move up towards 1295, in my opinion, to see the bulls able to get over these levels on their daily time frame. So you look at the past 3 weeks here, and it's been a solid 3 weeks, as has gold, but it's just not as strong. There's more factors at play, obviously, than just the price of gold. But it's surprising to me because the market is so strong. Usually the market's a big reason we can point to say the correlation's not really as strong. Not in this instance. So we'll see if we can get this bullish break, and if we do get that bull break, we'll see some more volume come in. It will get some more traders' attention, and we'll see if they can come back to this market. So I appreciate you watching. Hope you have a good weekend, and we'll see you soon.